Okay, hello traders. Good morning. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 24th. About ready to wrap up the week here for the Thanksgiving holiday. Good morning, Jay, Marcin. Great to see everyone here in the room. So we got initial move yesterday. Dollar reacting off of major support that we've been talking about for months. You saw that pop come back, and now we're kind of reassessing the scenario again. So a thrust higher basically in DXY is on the pullback. We'll look at that, talk about Euro. Aussie broke higher above that key resistance zone. Same thing with Sterling, also popped through its resistance. So we need to see if both of those be the favored moves if the dollar sells off. If not, we'll revisit again Euro, CAD, gold, Sterling, SPX, and Kiwi. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. All right, here's what DXY looked like last night. So it looked like we had gotten the initial pop. Again, first of all, you all have seen this before. Here's the DXY weekly chart that we're looking at. Key support 91.92 into 92.28. 2016 lows. You've got the 2018 open slope support. It's loaded. We drill down deeper into the start of the week, then we broke higher on a near-term breakout. Here's what the daily chart looked like last night. Outside reversal off the lows, seemingly, right? Well, it wasn't a reversal, but it was an outside candle off the lows. Takes you back above. Again, that key support zone, near term on a closed basis, rock solid. Rock solid. So the monthly range lows are preserved. You're sitting at the monthly opening range low. You're sitting at the yearly range lows. You're sitting at that key support that we talked about near the 2018 open. Look for reaction here. Here's the intraday. Again, last night, that breakout looked legit. Came back, tested as support almost while we were writing this. Later in the night, dribbled down lower again for a stab. And here we are, essentially unchanged, fractionally higher on the week. It's Tuesday. The weekly opening range is set at support. I think you get a breakout here. Look for the reaction. Okay. Obviously, ideal scenario would have been this breakout here. It gives you a pullback into support, then follow through for the real stretch. At the end of the day, the range is set. It's Tuesday. We're at support in DXY. So where does that put us on Euro? Unfortunately, in the same scenario. The breakout here didn't give us much clearance either. So here's what Euro looked like back on the 19th. This is the close of last week. We were coming into this key support resistance region, at 119.11, 119.24. Talked about that zone last week. Literally caught the high before pulling back. We were looking for an exhaustion high ahead of this for a move lower. So last week's opening range was preserved right into the close of the week. This again yesterday looked phenomenal. Failed at last week's range lows, and here we are again. Opening range is set right at resistance. You're sitting mid-range. Ideal scenario, again, pistol to my head, I would still favor the fade against 1920 in Euro, generally speaking. But if that pops, we gotta respect the break. We're at too critical of a juncture on too many trades to kind of dismiss if one of these trades slip or pops above or below resistance. So we got to make sure that we're respecting the critical nature of this break. And if it breaches, man, you're looking at 1966 as sort of an initial target. 2018 open comes in at 120. So big levels for Euro. Inverse trade of DXY as we're looking for exhaustion on the downside for DXY, looking for continued exhaustion while below 1920 on Euro. Questions here. Both really provocative trades right now. We're heading into the thin holiday liquidity conditions as we get into, Thursday's Thanksgiving holiday here in the US. End of the month. It's just not I have trouble trusting and putting faith in major breakouts in these conditions. There's just not enough market participation to validate or put in, conviction on it. So keep that in mind. All right, so where does that leave us on trades like Aussie, where we basically popped through a major resistance zone? Here's what Aussie looked like last night. The zone that we've been talking about was 73.21 and 73.28. Again, rock solid on every single attempt. Yesterday, weekly open turned right lower to support, looked really clean and ripe for sort of another exhaustion pump and a move lower. We broke this higher. High day close comes in at 73.71. Didn't quite get that high. Here's the pullback, looking to see if we get another inflection off this zone. So could be just a weekly opening range setting up below the HDC. Okay, maybe we maintain a close below 73.21 and keeps that sort of vulnerability. If the close is above, you gotta look higher. You gotta look higher. 71, 73.71, 74.13 is a soft target. That's just the yearly highs that we made registered earlier in August. You're essentially looking for that drive higher towards like 74.55, the May low day close from last year, but really it's the upper parallels. So a little bit of a change of the beat here. And again, let me just take you back real quick and show you Aussie, where we're coming from. This is how important this region is. 73.29 is going to be the swing lows that he made back here in May of 2017. Major pivot in price. Last year's high is right here at 72.95, already above that. Slope resistance off the 2011 decline. A parallel off the 2018 high. Resistance, we're there now. Look for reaction here. Still could be an exhaustion trade, right? It still could fail here and pull back, but boy, do we need to be careful. And again, where we are in time is what's really setting me off here. So watch today's close, specifically as it relates to 73.71, the high day close for the year. Again, all things held constant. Slope support, break, resistance, 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 resistance. Watch this level today. All right, that is Aussie. Questions on the Australian dollar? So I'll take a segue here into dollar yen, but there's really not much to update from yesterday. This is one of the ones that actually did a decent hold. So the breakout of the descending channel that we talked about in yesterday's update was kind of the focus. This pitchfork that we drew on here, again, the previous update is always updated for you guys there on the 18th. Lower parallel held support. Here's the breakthrough channel resistance. You look for channel resistance to hold support. Okay, next upside shots from here are still going to be that 104.90 level, which is the 618 basically of the near-term drop. Right now, you're pressing the monthly open. So just kind of a level to watch. But right higher is that 618. And let me just bring this on. I wanted to clean it up yesterday. The 50 is here too, just for reference, 104.66. It's not a target I'm looking at per se, but just to give you some reference there. 618 comes in at 104.90 on the upside. So hopefully maintain stance above 104. Bullish inval still 103.73. Kind of scratch that 764 at this point. So your new bullish inval at the weekly open, top side level. Classic dollar yen wicked price action. Look at the weekly. Look at the weekly. Remember that key zone that we highlighted for months, 104.12 to 104.46? Held support, held support, held support. Then for the last 4 weeks, we've been just sailing around this critical zone. Drill down deeper, get a little bit more clarity on where we are in price. Okay, we're making good time today. I'm flying through these. That is dollar yen. So gold, 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 gold. Loving the move. I hope some of you have taken advantage of this. It's the pullback we've been talking about literally for 4 months. Finally hit the last of those levels today, or just about. What was the low here? 1804. That we're looking for 1803. So maybe a dribble lower. But boy, oh boy, this is a big, big, big move. So here's gold. Right, biggest fake out on the century right here on that breakout. We talked about it. Outside reversal the following week kind of was the tell. Kept the focus lower. The big levels were 1836 and 1803. Okay, if and when we trigger 1803, I'm going to be really way more reserved on pressing you guys for the short side of gold, because man, we've been waiting for these targets for a while. This constitutes two equal legs off the high. So if it's corrective, that's your first sort of level. A secondary measurement of the wider sort of wave structure gives you a move down to 1740. So that's sort of the risk if we buckle below 1790s here, which is the 2012 highs. Excuse me. So this is huge. This is huge. Why else would I suggest that this is such a major level? Well, it's downtrend support. What do we always say? A break of downtrend support oftentimes can be the sharpest part of the drop, just as the breach of uptrend resistance can oftentimes be the sharpest part of the rally. So this is huge for me. 1836 was important. The fact that 1836 break fueled an accelerated move in price tells you that. And there's so much slope there, both downslope support and former upslope support, maybe now resistance, right? So man, this was big. This was big. Here's gold on the daily chart. Excuse me, I'm losing my voice. 1803, there it is, 2012 high, 1790. Nice pivot in price. Again, lower parallel support. It's just a parallel of the highs. That's your channel right there. The uptrend that we were in all year long prior to the July breakout. I just want to show you this slope. There's a lot of tendencies once we break the slope to kind of scratch it and move on. Look how this has continued to offer fruit on every test, on every break. Interior levels here again, support, 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 break, break, support, median line break. The 25% parallel, guess what? It's here too now as well. 1803, 1790. Watch for support. Near-term resistance right back at 1737, 1750, kind of the lows they made back here in September. Bearish invalidation at the median line all the way up here. So where does that put us on the scalp? Well, here's what it looks like, guys, on the near term. It's just too clean. It's freakishly clean, okay? This is the same pitchfork that we added on last week. Nothing changed, okay? The upper parallel held. There's the break of the median line. There's 1829. Was that 1829? It was 1839, right below the 1836 level, 1829. We broke right below it, held short order for resistance. Here's the next move lower, and we've already taken out. Obviously, we've taken out the 1810 level, but the 1803, like I said, we're $1 off. That's the longer dated 100% extension off the high. You can actually probably scratch this. 1618 at this point. All right, near-term resistance 1829. Again, 1836. You'd want to see exhaustion ahead of this zone if we are heading lower, and a downside break below 1803, 1790, and 1784 are your next downside targets. Don't chase here. If you're not already holding shorts, there's nothing to do. If it recovers, again, on a bear market recovery, 1829, 1836 is really what we need to see capped if we're heading lower. But for all intents and purposes, guys, the two levels that we've talked about literally for the last 3 months, 1836 and 1803, for all intents and purposes, those have been, those executed. So ease up on the bearish tone. okay, until we look for a reaction here or some sort of recovery that fails ahead of 1830. Big moves for gold. Big moves for gold. I'll be putting out a piece on Daily Effects later today about this move. Okay, so that's number 5. Number 6, sterling. Here's British pound. Oh boy. Well, 33.11. We talked about this level at length. Big zone of resistance. Here's sterling on the weekly charts. All right. So 33.11 into 33.35 is going to be the 2019 high week close. It's going to be the 786 retracement of the near-term decline. We were looking at that here. A couple of things I just wanted to highlight. I think I might have talked about this in the webinar. I can't even remember yesterday in Daily Effects. This slope right here. So it's only a 2-point touch. Basically caught the high yesterday. So that's not all that impressive, right? But something to take note of. The other thing I want to take note of is the 2017 high week close at 34.94. That's a massive, massive level. Okay, again, it's the 2017 weekly reversal close, the high week close, pivot in 2018, the high in 2019, the high in August, converges on slope. Not out of the woods yet, but boy, oh boy, is sterling pushing some big levels. Here's sterling on the daily chart. This is still my reason for concern here. All things held constant, a close above 33.11, 33.10 for me would have been breakout. Okay, 786 retracement of the near-term decline, cool. Monthly opening range high, cool. Uptrend resistance, damn cool. Well, like I said, all things held constant, that would have been a breakout, save the fact that the high day close is just higher. Lateral resistance at 33.86, and again, that 2007 slope was right there. So like, all right, what breakout am I playing here? The breakout of uptrend resistance or the breakout of multi-year downtrend resistance? Well, I'll tell you what, we haven't gotten the multi-year breakout yet. And while the near-term uptrend breakout does keep the focus higher, I'm squeezed right back into this resistance. So we're not out of the woods yet. Pistol to my head, I would still think sterling is at risk for failure here. But at the end of the day, the technical significance of this barrier cannot be downplayed. And if we max 33.86 on a closed basis, it's not only a breakout. In my opinion, it's like a radical breakout. You're looking for 35. All right. So with all that said, here's what it looks like here on the intraday chart. And here's the same intraday chart that we've been following here on SB, okay? 33.11, 33.10, it's right there. Here's where we opened the week yesterday. I was telling you guys, look for reaction like right here. If this breaches, yeah, short order 33.86, again, that parallel. Well, that was right. Failure. Rallied again in overnight trade. Support, former resistance, now support. So all things held constant, we're still in this uptrend. Ugly as it may be, we're still there. So the one saving grace on all of these setups is what's happening. We're heading into Tuesday, and they've all set a pretty nice weekly opening range. So for this one, again, if we breach 33.86, if we top the weekly opening range to the upside, you're probably looking for that stretch towards 35. Weekly opening range break to the downside, you still have to contend with 32.50, which is the objective yearly open, but below that, you're looking for a failure to breach the yearly open. And you're looking for that exhaustive trade lower. So that's where I am on sterling. Again, where we are in time with the holiday and with all this bugs me. I want to be short. My inclination would be to fade pops here below 33.86, but you know, that's the pivot. If we max that, I think again 35 is a short order trade for sterling. Brexit news and the like, and all these commentary and headlines that could come out. Obviously, sort of a big rumbler there as well. So keep your eye on that. Dollar CAD number 7. His It's holding its own. It's holding its own. The same range exists, so there's really not much to update here as far as levels are concerned. That's what it looked like into the start of the week. We highlighted resistance at 31.20, support at 30.20, 100 pip range, and it's exactly where we've been. Here's the turn. Here's the turn. Still looking for sort of a resolution here. Remember, for dollar CAD, the whole sort of trade here was break above the median line. We sat up and leaned on a support, and you're looking for a stretch towards the upper parallel. Now, here was the first pullback. Would have been nice if we doubled back into that 618. From here, you're sitting mid-range. There's really no clear directional bias. Momentum flatlining at 40. I want to see the move higher. You got to see a break of the weekly opening range at least near term to give you any type of consideration for a move there. All right, just a possible slope I might want to consider if we do move. You know, way too early. Bearish invalidation 31.85 rather, excuse me, 31.72, this zone here. Actually, got to adjust that. Sorry about that. Adjust that 31.62 into 31.72. 10 pips below instead of 10 pips above right there. Okay, so that is Looney. We'll hit Kiwi and we'll wrap it up with some SPX. So that's number 7, number 8. Okay, so Kiwi dollar, very similar to Aussie, right? In the breakout type of scenario. Here's Kiwi. Upslope resistance just higher. June open was a level that we highlighted, 69.91. We hit the 70 handle, pulled back. Here's Kiwi, guys. Of the trades where the dollar runaway is the sort of the setup, Kiwi's the one I don't want to bite because of the severity of the breakout that we talked about last month, and that was the breakout above the yearly open and above the yearly opening range highs. This was big. We tried to put some upslope on it. It's breaching that. Look, this one's like a runaway trade. If you're not already long, you're chasing it any which way you slice it. Not my cup of tea. In fact, again, my humble opinion, I actually think this is like gonna be a really nice signal. In momentum, failure, you get exhaustion, either into 70-60 if you get that high, or 70-90 for a great pullback. But I mean, there's just no indications of that happening yet. Here's the daily chart. You're still deep in overbought condition, even on the daily momentum indicator. It looks tired, but guess what? It looked tired here. It looked tired here. I'm not going to fight this just yet. Now, on the intraday chart, it's looking at least closer to uptrend resistance, which is where you want to start to look for those stronger divergent marks like you saw here. Price action even making a break. It looked like it was going to rip even higher, but that was a really strong divergent signal. Even that pullback was super shallow, but that's the indicator that you're looking for. That's the condition that you're looking for. So we don't have it yet. Next levels on the upside are 70-50 is a confluence zone there with the upper parallel, but just wanted to give you an update on the same structure, guys, but it's really hard to get excited about actually trying to fight this. I would say the thing that would put me back in at least a corrective stance, looking for the move lower, would be a break below the weekly open, which is right here. That would be the onset of a bigger problem, in my opinion, for the Kiwi rally if we break lower. But right now, it doesn't mean anything. All right, there's the updated levels for you real quick. Okay. SPX, last but not least. So look, is this a breakout? I told you guys 3605 is what I noted to be the level of which we would need to see exhaustion here if this is heading lower. So what the heck is this? Um, I don't like it. I don't like it. I don't like anything about it. Um, that slope should have held if we were going to make any type of meaningful move here. Um, here's the daily chart. So what would you interpret that? Oops. I already see some people drawing this as a triangle, but that's, wait, I mean, here, you could make that argument, but is that some sort of operational move right here with these two highs? I don't know. It could be a near-term consolidation, in which case the outside break still gives you an uptrend, but you're in record high territory at this point. So not buying it. Again, just keep your eye on this. I just want to show you how the levels played out. And technically, as we were talking about last week and this week, the focus was going to be lower while within this formation, specifically well below 36. So 3605. So above here, I'm not touching this. If by some chance we opened up the US trade session and buckled below, okay, maybe we can start to readjust the slope a little bit, draw it lower. If we take this into a shift, it'll pop it up a little bit higher and keep it in, and that does put the support still in play. So it could be still failure, but this is, put this on the side of where dollar and euro and all those are trading, like those pivotal levels. It's someone's going to get ripped up. It's thin liquidity conditions. We're heading into the holiday. Stay nimble. Stay nimble. Again, pistol to my head. I think it pops fire again today, but fails. That's just me. That's just me. Okay. That's everything that's on my list. Tomorrow, you do get a flurry of data out of the U.S. with core PCE and, more importantly, the FOMC minutes. You're getting some commentary today about Yellen possibly taking up the helm from Powell as per the Biden administration. So something to keep in mind there. But pretty light in data outside of the US. So keep the US centric, real market sentiment focus. Martin wants to take look at a couple setups here on Kiwi CAD. Still straight shot up, right? Nothing's changed on this one. Man. So that breakout really did accelerate. You're at fresh yearly highs on the daily chart. A little more room to go. So 91.92 and 92.81. 92.81 is just the swing highs from 2019. So that's an objective yearly high. 91.92 is a 618 off the low. And in between that zone is this whole parallel. Now, what I would do on a move like this, let's take a parallel. Gives you a little bit more reference in time. Could take a little bit of a snail's crawl up there, but still. I'd be looking for that. Man, key support's way down here. Monthly open, median line, initial support. I would put it right at that parallel. Do you see how ridiculous that has been? Resistance, resistance, or support rather, break, resistance, 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 breakout, near-term support, right around there. Look at that, Marcin. Watch those levels. It's looking tired. If you're holding longs, anything south of 90, I think you're good. Okay. 91.90 into that parallel. Okay, which starts out a little bit lower. So let's say if it happens over the next 24 hours, like 91.70s, look for reaction there. Near-term support, the 90 handle, 90.09. Bullish invalidation has to still be down at essentially 88. Makes sense. Aussie Kiwi was the other one that you want to look at. So this one is one where I would actually be tempted to try to fade the weakness here. Obviously, Kiwi strength has outpaced Aussie strength. We've seen that. We've seen that even earlier in the week here. My problem with this trade is Kiwi. Okay, I don't really want to take a short on Kiwi with it breaking out like that yet. But if we do get some material build here or some near-term price action for a reversal pattern or topside break of the weekly opening range, I think this is prime region for you to see at least some sort of near-term recovery in Aussie Kiwi. Whether it's Aussie playing catch up or whether it's Kiwi taking a breather, one of the two. Yeah, march in for a bounce to go long. Again, just my humble opinion. Now you wouldn't really be targeting anything crazy. Like the first levels would be basically the lows from last month and this month's open. But this would be a nice spot for it to at least see that initial recovery off the lows. It's again, I don't think the indication's quite there yet, Marcin, and you're fighting a pretty strong downtrend. So take it with a grain of salt, but that's kind of the initial approach I'd look at it. And what was the other thing you wanted? Sterling Key. Also, a trade where I would love for this to draw a new low, Marcin, and then buy it. My humble opinion. I'm not going to try to fight it here off these lows. We're not a major inflection support. And the rejection that you got near the upper parallel here is pretty telling. So I'd be very cautious in trying to fight this, but I think we're on the same. Yeah, he said, okay, I'll wait for it. I think we're on the same page. I think if you get another low, one more drop off, you look for the exhaustive mood to give you that rebound. But again, Kiwi strength is still on the play here. Okay, all right, guys. I want to wish you all a happy and healthy, blessed Thanksgiving for those of you who are celebrating, and even if you aren't, for the next couple of days. Give some thanks for everything that we have. Look forward to what could be a really interesting start of December, close of November with everything that's been going on. So keep the powder dry. Hope you guys enjoy some great time with family. Blessings to all, and I will see you on Monday of next week on the free channel for Daily FX, and then right back here on SB Tuesday and Thursday. Have a great weekend, guys. Same to you, Jay, Marcin, Aurelian. Cheers.